Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin dominance. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. Bitcoin dominance, a topic we have covered tirelessly on this channel throughout the years. A topic I think at once upon a time many people wrote off as insignificant or delusional, the idea that Bitcoin dominance could hang out again at 58%. But here we are. Here we are. I do believe Bitcoin dominance, as I've said, is about to enter into its final stretch, right? I think it's basically in that zone, but I ultimately think it is going to go just a bit higher before topping out probably at around 60%, at which point I would expect it to very likely go down in 2025. So let's take a look at where we are here on Bitcoin dominance. And the thing is with Bitcoin dominance, a lot of people are in one of two camps, right? One camp is they think it's useless and they say, well, you can't trade it, which is not true, right? And then on the other hand, there's people that find a lot of value in it. Now, the reason why I have focused on it for the last several years is because back at the beginning of 2022, I said, look, guys, the bear market's starting, right? No one really knows exactly where the bottom's going to be or exactly when the market's going to turn around. But if you want to buy something, you're probably better off just buying Bitcoin over the collective altcoin market. Now, I was pretty clear back then that some altcoins would in fact outperform Bitcoin because some always do in a Bitcoin dominance uptrend. The reverse can also be true. In Bitcoin dominance downtrends, not all altcoins outperform Bitcoin. There's a few that are so weak, they go against the trend. But what I said back then was if you stick with Bitcoin until dominance is at 60%, it will help you preserve the Satoshi value of your portfolio, right? Now, back then, I think this was very, very comical. A lot of people laughed, and they continued to laugh even as Bitcoin dominance went up because their altcoins were going up. But what they failed to understand, a lot of them, is that they still would have just been better off for the most part had they stuck with Bitcoin. And what you'll see is that in order to rationalize the other views, they have to cherry pick very specific points to say why Bitcoin dominance does not matter. So when we look at a chart like Bitcoin dominance, and you look at it and people say, well, you can't trade it. Well, think about it like this, right? ETH makes up a huge component of, where Bitcoin dominance is going to go, right? Because it's the number 2 by market cap. And when you look at something like, the ETH Bitcoin valuation, right? So if we go over here and pull up the ETH Bitcoin valuation, this is one of those things where it's somewhat abstract, as I've said before. If you're not very familiar with working with the Satoshi value of your portfolio, right? To say that ETH Bitcoin is trading at 0.039 to someone that's new to crypto, they're probably like, what the hell does that mean? I don't know what 0.039 means, right? What does it mean to say that ETH is trading at 0.039? And what's fascinating is for years, I have said that ETH Bitcoin will go back to the 0.03 to 0.04 range. And for years, people laughed at that idea. And now it is just in the 0.03 to 0.04 range. And you know what I hear? Nothing. Silence from the critics. Absolute silence. Because every single rally that ETH Bitcoin had over the years, which I tried painfully to convince people, was nothing more than a lower high. Now, I would argue that ETH Bitcoin has entered into the bottoming process, right? I would absolutely make that argument. I think that it's likely going to bottom somewhere between 0.03 to 0.04. It's possible that it already has bottomed. But what I said previously is that until it takes out the 50-day SMA, I would be, cautious about putting too much weight behind that. If you were to, and by the way, we talk about ETH Bitcoin because it directly relates to Bitcoin dominance, okay? When you look at 2019, after ETH Bitcoin durably broke down, whenever the 50-day SMA was reclaimed, it meant the bottom was in. All right. Now, if you go to 2016, right? 2016, ETH Bitcoin. Once the range low was durably broken, none of this fake out nonsense, right? That we also got in 2024. The bottom was in after ETH Bitcoin broke through the 50-day moving average, right? After it. So even though there was a sizable rally from right here, from 0.008 or so up to 0.011, it still failed and went just a little bit lower before finally bottoming, okay? So when I look at it today, and I said this weeks ago, I said, look, guys, show me some daily closes above the 50-day SMA, right? And then we can start to talk about it. That doesn't mean you should wait for them to hedge, right? Absolutely not, right? But when I said that back over here in early September, you can see that ETH Bitcoin went down. It came back up. It got rejected off the 50-day SMA. And now it's basically trying to hold these lows once again, okay? So again, my view on this is that once ETH Bitcoin can get some daily closes above the 50-day SMA, then the odds start to increase considerably that the low is in. Until that time, I still think it makes sense to be open-minded that it could go a little bit lower, right? Just a little bit lower. Still probably somewhere within the 0.03 to 0.04 range. If 0.038 does not hold, I think the next support would be at 0.036. As I pointed out in 2019, the low before the May rally was at 0.024, right? So if you put a price label on it right here, it was 0.024. The low before the May rally was 0.044 in 2024. But then the actual low ended up being 0.016. So then if the actual low is just, we're increasing it by 0.02, then it would put it at 0.036, which is interesting because 0.036 happens to correspond roughly to the 2016 all-time, the 2016 high of ETH Bitcoin, right? If you just say draw a line across 2016 from that high, you go across the page, you'll find that, that's exactly where that that level was, right? That 0.036 level was the 2016 high. But again, it doesn't have to go that low, right? It doesn't. And it might just bottom out at 0.038. I think worst case scenario would be 0.03, but I would say that would be absolute worst case scenario. And I don't really think the probability of that going that low this year is that high. It's always a possibility, but it's not my base case right now. Like my base case is, 0.038, 0.036, maybe 0.034, but I do think ETH Bitcoin is in the bottoming process, which means that Bitcoin dominance is likely entering into the topping process. The main reason that I think Bitcoin dominance will go higher is not really because of ETH Bitcoin, right? I think ETH Bitcoin, honestly, is probably dropped enough to sort of fulfill my own objective as to where I thought ETH Bitcoin was going to go, right? I can't spend 3 years saying it's going to go to 0.03 to 0.04, watch it go there, and remain bearish on it, right? I mean, I'm open-minded to it going a little bit lower, right? I'm absolutely open-minded to it, but again, you don't call for something for years and then watch it come and go, right? So for me, it doesn't really make sense to be overly bearish on the ETH Bitcoin ratio anymore, right? At least not for this year. I could see it going a little bit lower, but this is one of those things where like Bitcoin USD in 2022, right? it bottomed at 15.4, right? But back in the summer of 2022, I said it would likely drop again in Q4, right? And it did. But even back then, I said, look, it's not going to matter, right? I mean, if you buy Bitcoin at 17K in a few years, you're still likely not going to care whether you got it at 17K, 15K, 14K, 13K, whatever, right? It's not going to really matter. So I think you could say the same thing about ETH Bitcoin right now as it relates to next year. But the reason I still continue to remain optimistic on Bitcoin dominance is because of the altcoin market, right? And again, as I said previously, 0.039 is somewhat abstract. What does that mean? Well, the way you can find out what it means is you just take the inverse of it, right? So instead of looking at ETH Bitcoin, you're looking at Bitcoin ETH. And you can see the last time I showed you guys this chart, I was pointing out how, back in at the merge, 1 Bitcoin would get you 11 ETH. Then the last time I made this video, I was showing how 1 Bitcoin got you 22 ETH. And now I can show you that 1 Bitcoin gets you 25 ETH, right? So you see why it matters. So you can't really say that you can't trade Bitcoin dominance, right? I mean, if you understand the main view, and then you understand that the only real way to get there, to go from 40% dominance to 60% dominance, is for the higher market cap altcoins to go down and for ETH to go down against Bitcoin, then you can absolutely trade it, right? I mean, and what I did back around the merge is I just converted my ETH to Bitcoin, right? That's how you trade it. It's not like you have to go buy Bitcoin dominance. You just, the way you take advantage of Bitcoin dominance uptrends is by trading in altcoins for Bitcoin before it happens. Now, it's far too late at this point, I think, to get on that train. But this is the view, right? This is why Bitcoin dominance is important. The reason why I think Bitcoin dominance can go higher from here, it could be because ETH Bitcoin goes just a little bit lower. But another reason are alt Bitcoin pairs, right? If you look at total 3 minus USDT divided by Bitcoin, as I've said previously, I think they're oscillators at best, right? And if they are oscillators at best, how do I assume that they won't eventually just go back down to the range low? I do think they will go back down to the range low. In fact, they were at the range low in December of the last halving year. So why can't they go back down to the range low potentially by December of this halving year? I think it's absolutely possible for that to happen, and I would still consider the eventual breakdown to the lows to be the most likely scenario. Now, could there be a pump before going there? It's always possible. But I will say this. I think before alt Bitcoin pairs go back up here to parity with Bitcoin, I think they go down here first. Okay, that's what I think. Before they come back up to parity, I think they go back down to 0.25. Now, that doesn't mean they can't go up a little bit between now and then, but that is what I think. And the reason why I still remain adamant about this view is because I think I'm being conservative. I think I'm being reasonable, and as I've said before, right, I think I'm throwing the degens a bone by just saying they're oscillators at best, because I mean it when I say oscillators at best, because the other way you could draw this, right, the other way that you could interpret this chart is to say, what if they're not oscillators? What if, on the other hand, they are just bleeders, right? What if alt Bitcoin pairs just bleed over a long enough period of time? Because, even if you ignore this, right, that's a high, that's a lower high, and then this is a low, and then that's a lower low. Now, of course, we can come up with the reasons for why those lows occurred, but at the end of the day, you have a high, so you have a low, a high, a lower low, and a lower high. So it's a trend. So I'm just saying, for them to become oscillators, at best, they could come back down to 0.25. And I'm saying that's good enough for me to be satisfied about Bitcoin dominance, but there's still a chance they come all the way back down here, which I don't really think a lot of people want to even think about that outcome. So when I say oscillators at best, I mean it. I mean it. Now, why haven't they actually broken down, right? Why haven't they? And you could argue, well, they sort of have a little bit, but they haven't really taken that final plunge. And so what is the reason for that? Well, if you look here, what you'll notice, this happens sometimes where something will try to break down, but then it will wait until something else forces it down. So what you can see with all Bitcoin pairs this cycle is that they were previously holding support at 0.4, right? This is that 0.4 level that they held support at for actually quite a long period of time. Every time that they came down here, they went down to about 0.4. There were some times where they wicked down to 0.39 or a little bit lower, but mostly 0.4 was held as support. Now, eventually, 0.4 failed to hold as support. We can see a larger move down, a bounce back up, sort of making people think it was just a fake out, right? They say, oh, it went down. Oh, it's just a fake out. Don't worry. And then it came back down again, and it spent more time down here, and then it's rallied back up. But now you can see that the prior support at 0.4 has quietly turned into resistance, right? So you basically have a scenario where all Bitcoin pairs have been stuck down here for several months, right? Literally since June, they've been down here with some occasional moves back above it. But they've been stuck down here for several months. And I think the reason they haven't broken down yet durably is because they were waiting on the bull market support band to come down and push them down, right? So now you have the bull market support band has crossed below the prior support, right? So if you look at the 20-week SMA of alt Bitcoin pairs at 0.39, now the 21-week EMA is still at 0.4, and now that is where alt Bitcoin pairs are getting rejected, right? Before, they were holding support at 0.4, but since June, they've been struggling to spend any real time above 0.4, and now you have the bull market support band also pushing them down from 0.4. So I think that you're about to see the final drop of alt Bitcoin pairs this cycle, right? So that is still my view. Now, last cycle, if you guys remember, you could have connected the dots, roughly speaking, to figure out when the low was going to be, right? If you connected this wick to this, to these wicks over here, right? If you connected to the low, yes, there were some wicks a little bit below, but it was the third tag of this trend line that marked the actual bottom for alt Bitcoin pairs during the quantitative tightening phase of the cycle. Now, obviously, they went a bit lower later on, right? But that was during a parabolic Bitcoin rally during quantitative easing, right? That's a different part of the cycle, right? We're not in that part of the cycle, right? We're not in the quantitative easing part of the cycle. We still are experiencing quantitative tightening right now, and interest rates have only just begun to drop a little bit. So I'm not saying that can't happen again this cycle. I'm just saying that we haven't reached that point, right? We're still at a phase where the Fed's continuing quantitative tightening. And even last cycle, when the Fed cut rates in July, right here, alt Bitcoin pairs still dropped to the range lows even after the first rate cut, right? So we can't even say that a rate cut is necessarily going to save alt Bitcoin pairs when last cycle they dropped to the range low after rate cuts arrived. Now, the angle of descent here is a lot different than what we've seen this cycle, right? So if you look at it this cycle, and you draw something similar, right? You say, oh, this is your first low, and then here's your second. Then where does your third low come in, right? Well, if you draw the support line at 0.25, you can roughly see it comes by December, right? By December of 2024. You see that? So I still think there is a good chance here that alt Bitcoin pairs will take that move down. And that is the main reason I think that Bitcoin dominance is going to go up into the end of the year. Remember, last cycle, it took until the Fed actually entered into quantitative easing, where they were expanding their balance sheet, before alt Bitcoin pairs even bottomed. And that has not yet happened, right? You can see that the Fed is still reducing the size of their balance sheet. Therefore, it makes sense in my mind to assume that alt Bitcoin pairs will still go down. I'm not suggesting that the balance sheet is there's a direct trade there between the balance sheet of central banks and altcoins. I'm just saying it's a function of liquidity. Now, there's some people that say, well, what about the money supply? That's something different, right? If you look at an approximation of the money supply, you can see that that's gone up. That's been a better comparison to risk assets on their USD pairs, right? When you look at the money supply compared to Bitcoin USD. But if you want to get an insight into alt Bitcoin pairs, you look at not just the balance sheet of the Fed, but you look at all central banks, or at least an approximation of them. And one way that you can do that is you can look at the net liquidity indicator, right? And in this case, what you'll notice is that as net liquidity goes down, alt Bitcoin pairs go down. As net liquidity generally goes up, alt Bitcoin pairs generally go up, right? So that the net liquidity indicator that we have here has been great for tracking alt Bitcoin pairs. And you can see pretty clearly that it just keeps on putting in lower highs and lower lows, right? Just like it did last cycle. You see that? Like, it did the same thing last cycle. And then eventually, after it broke out of this, then Bitcoin dominance started to go down and alt Bitcoin pairs started to go up. But what I'm saying right now is that if you look closely at this, when alt Bitcoin pairs had sort of this false breakdown back over here in June, where it looked like they were about to break down, that was also when net liquidity looked like it was about to break down too. And then it went back up. Okay. But the issue now for net liquidity is that net liquidity looks to have formed another lower high. Now, the reason it's formed another lower high, despite the fact that you have some central banks, increasing the size of their balance sheet, right? If you look at like the Bank of China, obviously they're injecting liquidity over there. But the Fed is still reducing the size of their balance sheet, as well as some other central banks. But furthermore, the thing that we have to remember is that one of the main components to net liquidity is the dollar, because you have to actually convert the balance sheet of the central banks in other parts of the world to the dollar to get, to add them all up to the same unit. And the dollar has been going up recently, which is what is causing net liquidity to go down. Okay, so if you go look at the dollar, I have said previously that I was bullish on the dollar going into October. Now, the reason I was bullish on the dollar going into October was because I said previously that the dollar is tracking treasury yields pretty closely, right? And if you go look at the 2-year treasury, you can see that it was actually, sort of sweeping the prior low. And what I said back then was, look, guys, the Fed's about to cut 50 basis points, but unless there is a clear and obvious sign that a recession is here, right? And it's not just something we're still manifesting in our minds. But if it's actually here, then yeah, it's probably more likely that the 2-year yield just breaks down. But on the other hand, what if it's not here, right? Then wouldn't it favor the 2-year yield rallying back up to the bull market support band at the very least? Absolutely, right? And that's what's happened so far. It hasn't made it there, but it's not too far away. So what happened is you had all these negative jobs data coming out before the 50 basis point rate cut, even negative 818,000 revisions to jobs in 2023, over parts of 2023 and 2024, I believe. And then all this negative stuff came out. The Fed cuts 50 basis points. And then ever since then, all the jobs data has been better than expected. So now the market's like, well, what's the Fed doing by cutting 50 basis points? This is why it's such a difficult job at the Fed, because back then everyone was screaming to do 50. And now you get all this jobs data that doesn't look so bad. Now, that doesn't mean it's not going to get revised back down in a couple of months. But in the short term, the market has to go with what the market sees. And right now, the market sees the Fed cutting 50 basis points, and the job market has cooled off a little bit over the last couple of months, right? If you look at the unemployment rate, it's cooled off a little bit. And so the 2-year yield rallies. Why do we care about the 2-year yield? I don't imagine many people care too much about it unless you're going out and buying T-bills or CDs. Well, the reason it matters is because the dollar has been tracking the 2-year yield pretty closely, as it has the 10-year yield, right? So when the dollar goes down, the 2-year yield has been going down. When the dollar goes up, the 2-year yield has been going up, right? You see that? So because of the expectation that the 2-year yield was going to rally, I therefore thought that the dollar was going to rally. Okay? Other evidence to suggest that the dollar was going to rally in October was also the fact that in 2016, which a lot of people like to compare this cycle to 2016, we saw the dollar start to rally in October, right? And it rallied 10% before the end of the year, right? This was, really from October until the end of the year, it rallied about 9%. To give you an idea of where that would put the dollar, if it rallied 9%, it would put it back at almost 109, 110, somewhere in that ballpark, which again, I don't really think a lot of people are even considering right now, but it is a possibility. Now, in the short term, the dollar is at a major resistance level, right? Even if you get your tea leaves out and you look at the dollar, you could say, all right, well, maybe it's just back testing the prior support. It's also back testing the bull market support band. So this is a very important spot for the dollar. It's possible it just gets rejected. If it gets rejected, I will try to quickly pivot my view on the dollar. But in the short term, if the labor market data still doesn't look so bad immediately, then why can't the dollar continue to rally? By the way, you see this trend here on the dollar. I could see ETH Bitcoin doing something like that, right? Where it puts in a low, it then looks like it might just double bottom, and then it sweeps that low and then goes up. Absolutely, that could happen for ETH Bitcoin. And it might be that sort of sweeping of the low that causes alt Bitcoin pairs to finally drop, right? It might actually be that. But yeah, I mean, I think that this makes a lot of sense that the dollar's gotten this big rally, as I said it probably would. And therefore, because of that rally, net liquidity has gone down. And when net liquidity goes down, alt Bitcoin pairs get rejected. When alt Bitcoin pairs get rejected, Bitcoin dominance generally goes up, right? Now, right now, Bitcoin dominance is at 58%. And a lot of times it can reverse in September, right? We've talked about that, but sometimes that reversal can be temporary, right? Like it just lasts like a month or something. For instance, in 2021, you can see that there was a reversal in September, right? But then it just reversed for 1 month, and then it came back down and then swept that prior low. So it's always possible that if this is a temporary reversal and Bitcoin dominance drops, it might just drop back to the bull market support band and then go up into the end of the year, right? But at this point, there's no clear indication it's going to even do that because Bitcoin dominance has remained bullish. I mean, it looked like maybe it was going to do that coming out of September as it dropped back to, 57%. But then last week, it just rallied back up to, back above 58%, which is where we are today. If you were to look at monthly Heikin-Ashi candles for Bitcoin dominance, think about how many people have faded this over the last 3 years, right? I mean, or at least since December of 2022, or the last 2 years. Think about how many people have faded it. I mean, you could even take it all the way back to, to January of 2022. And think that, look, if you just flip bullish on it when 2022 began, you're doing okay, right? I mean, yeah, like there was some volatility, but you're doing okay. And this is what has happened, essentially, is that, some people got very bearish on Bitcoin dominance. They thought it was going to go to 30%. But because Bitcoin USD went up, it sort of lifted some of their altcoin bags. But the problem is that Bitcoin hasn't gone anywhere since March. And because Bitcoin hasn't gone anywhere since March, alts have just bled back to Bitcoin, right? So look at this chart, right? I mean, if you look at Bitcoin USD, look at the chart of Bitcoin USD and see how it hasn't really gone anywhere since March, which we talked about because we said, look, Bitcoin or gold is breaking out back then, and USDT dominance is sitting its long-term trend line. That was likely the mid-cycle top for Bitcoin USD. And if you overlay Bitcoin dominance onto this chart, you will see that it has continued to skyrocket even while Bitcoin USD has gone absolutely nowhere, right? So the people that were laughing at Bitcoin dominance's, validity back over here because their altcoin was up are now stuck holding these alt bags that just keep on bleeding to Bitcoin. Bitcoin's been at 60K all year, but altcoins have gone down for most of the year. Now, of course, you can cherry pick different altcoins and tell whatever story you want to tell, but collectively, the altcoin market has been bleeding back to the kink. And again, we know last cycle it did not bottom. All Bitcoin pairs did not bottom until QE returned. Last meeting, Powell said, look, we're still going to continue QT for now, So I still think that is a very, very likely outcome that Bitcoin dominance goes to 60%. Now, why 60%? It's a question I get quite frequently. Why am I so hung up on 60%? Well, look, guys, it's just a number. I pulled it out of two different places, one of which was essentially saying that in bubbles, when you get these alt Bitcoin bubbles, you would expect potentially for them to return to where they broke down from. And where they broke down from was approximately 60%, right? That's why I've said 60%, is that's really where the breakdown occurred. If you look at ETH Bitcoin, for instance, I'm not suggesting that, that it has to go all the way back down here. I'm just saying, look, it looks kind of like the bubble for it started either where it is right now or a little bit lower, right? That's where the bubble started it, because before that it was somewhat constructive, right? It was just, moving up a little bit, pulling back, moving up, pulling back, and then all of a sudden way up with very little consolidation, very little pullback to the downside. So that's the same thing with Bitcoin dominance, right? I think that it's just going to return back to where the big breakdown occurred. The other spot where I think it gives some of that confluence with 60% is to look at last cycle and see that dominance retraced to the 0.618 fib retracement. And if it does the same thing this cycle, that would correspond to, again, 60%. So that is where I keep getting that 60% number. Furthermore, last cycle, when Bitcoin dominance crossed the 0.5 fib retracement, that's actually what corresponded to the mid-cycle top for Bitcoin USD, right? If you just take this down, that was more or less what corresponded to the mid-cycle top, right? When it passed through that 0.5 fib retracement level. And if you look at the same thing this cycle, you can see that when it crossed through the 0.5 fib, it was like 1 month after the top. That's what more or less was confirmation that sort of that mid-cycle top was in, right? It crossed it here on the monthly. The mid-cycle top was just 1 month before. This time, it wicked back up to it in April where it crossed it, and then the mid-cycle top was just 1 month before. And then you can see that Bitcoin USD basically just bled until after Bitcoin dominance hit the 0.618. And that could be the reason why Bitcoin USD has failed a lot of people's expectations since March, because, they were under the illusion that it was only going up because of these, all these ETF flows and everyone buying spot. But in reality, one of the big reasons it was going up was because people were just converting their alts to Bitcoin. I'm not trying to minimize the flows from the ETFs. They were impressive, absolutely, but I think a lot of times people underestimate the size of the market, right? They look at the flows and they're like, well, this has to be bullish. But the reason, I think what they missed was one of the reasons why Bitcoin was going up so aggressively was because people were converting their altcoins to Bitcoin. The problem now is that the purchasing power of their altcoins has gone down considerably. So now if you go convert your ETH to Bitcoin, you're not really getting nearly as much had you done it 2 years ago, right? So obviously if the purchasing power for alts goes down against Bitcoin, then it's not going to be as significant in propping up the price of Bitcoin USD. That doesn't mean that Bitcoin USD can't go up. It could, right? And it has. I mean, it certainly has. But there's this other element too of like, well, no one knows where Bitcoin USD is going to go, right? Obviously, October tends to be bullish, but counterpoint September tends to be bearish. And this year it was bullish. Last year, September through December, it was all green. So there's always a chance that happens again. But the counterpoint is that ETH USD, every time it is broken down against Bitcoin, ETH USD then went down in Q4 of that year, and it also went down in Q4 of 2016, which was a Bitcoin halving year, right? It also went down in Q4 2019. Here you have Q4 of 2024, and ETH USD has been following these monthly candles 2016 to 2024 precisely all year long. So because of that, I still think you have to wonder, could there be, could there be another hit? Bitcoin could theoretically take another hit. It's possible. Maybe it'll take another hit around the uninversion of the 3-month and the 10-year yield. It doesn't necessarily mean you have to have an immediate recession. Perhaps that gets delayed until 2026. I have no idea. But what I will say is that, when you look at let's look at the unemployment rate. I mean, look, the unemployment rate has dropped down recently. So is there a concern, right? Is there a concern? One problem I have with everyone that compares this, this cycle, they compare it to just the last two, right? Well, not the pandemic, but they'll just look at the dot-com crash and the financial crisis. They'll say, well, how does it compare to that? There's other recessions where the market only drops 20%, right? There's other recessions where it's not nearly as bad as the dot-com crash or the financial crisis. And interestingly enough, we could learn something from those recessions, right? For instance, there's a recession in 1957, right? There was a recession here. I believe that was a recession. Right here in 1957, where the unemployment rate went to 4.3%. And then it dropped over 2 months to 4.1. And everyone celebrated, probably, because, hey, things aren't so bad. And then the unemployment rate skyrocketed. from there, right? The following month, it went back up to 4.4% from 4.1, right? And that's when the recession occurred, right? So you could see something like that happen again. Now, someone might look at that and be like, oh my gosh, what did the S&P do? And then you pull up the S&P and you're like, oh, okay. It dropped from 47 to 40. Whoop-de-doo, right? So what? Who cares? It was a small drop, compared, but everyone obviously compares to the .com and the financial crisis, right? You can get garden style recessions, like the garden variety, not your 50% plunges. So I do want people to be aware of that, right? You could get a scenario going into the end of the year where the unemployment rate starts to go back up, and then everyone freaks out. It takes ETH to the lower logarithmic regression trend line, and then that's where it finally bottoms. And again, normally the markets bottom before the unemployment rate peaks. So there's absolutely a way that we could see Bitcoin dominance go to 60%, even if Bitcoin drops, right? Even if Bitcoin drops. And that's what happened last cycle. So, as far as Bitcoin dominance goes, I still am very much in the camp that it is going to go higher. If you look at quarterly candles for Bitcoin dominance, since October of 2022, there's only been one quarter where dominance was red, and it was the third quarter of 2023. If you were to look at the social risk, right? Well, first of all, let's go look at the social risk. It's at 0.086 or so. So it still hasn't really gone anywhere, right? That rate cut that led to a temporary surge in demand and interest by retail has just sort of fallen back off, suggesting that 50 basis points really isn't enough to move the needle, right? So the Fed's probably going to need to cut more to really bring more activity back out, right? I'm not suggesting they're looking at social risk, right? I'm just saying, like, this might very well be a good indicator as to what they need to do. Or it might, maybe it's not a good indicator of what they need to do, but it could be a good indicator of once they've done enough, we might actually see retail interest start to surge back up, just like it did in 2019 and 2020 after they cut rates about 3 times. So let's see what happens with social risk. Now, the reason social risk is important, as I've said, is if you look at Bitcoin dominance, excluding stablecoins, right? So we're going to look at it excluding stablecoins. And what I'd like to do is add on the social risk here. So let's take out dominance excluding stables, right? As long as social risk is going down or staying flat at low levels, dominance is going to go up more than likely, right? You can see that's what happened last time. Dominance only started to go down when social risk durably started to go back up and put in higher lows. So far, it hasn't really done that, right? I mean, in fact, social risk just put in a new low 2 months ago, right? And it's been lower highs since April, right? So this still looks like dominance is going to trend up until enough people come back to really, get dominance to top out. I still think it's going to take some more rate cuts. Remember, last cycle, it took 75 basis points of rate cuts to turn dominance around, right? Well, no, that's not true. It took it about 50, right? But it also corresponded to QE, so it's hard to exactly know. But the point is that social interest did not durably come back until after 75 basis points of the, what was the terminal rate back then? 225 or 250? Let's say it was 225. I don't really remember. Why don't we go take a look so I'm not just putting up something that doesn't actually make sense, which wouldn't be the first time. But let's go look at interest rates. You can see back then it was 2.5, right? So 2.5. So last time it was 75 over 2.5, right? And then this time the terminal rate was 5.5 for that rate hiking cycle. But so far they've only cut 50. Right? So this is still a much larger fraction than this, which is why I think they're going to need to cut more. And it's why I still think Bitcoin dominance is going to go up despite the fact that they've already cut rates. Because last cycle dominance went up after they cut rates, and last cycle dominance didn't top until QE began, and last cycle dominance didn't durably go down until after 3 rate cuts, which this cycle would correspond to approximately 165 basis points of rate cuts if you take the ratio, which approximately could have been achieved by December. But now all of a sudden the market is saying, you know what? Maybe the Fed doesn't need to cut 50 basis points in November. But if the 1957 comparison plays out and the unemployment rate comes in at 4.4%, because there will be one more labor market reading before the Fed makes their decision. If the labor market reading comes in at 4.4% unemployment, I could easily see this shifting back towards 50 basis points, right? If it turns out that, that this move by the unemployment rate was just sort of like a normal pullback. I mean, look at prior cycles, right? You can see that there are pullbacks in prior cycles that didn't mean the top was in, right? I mean, there's plenty of those. So this could just be that, and it could be that in a couple of months we're laughing at the idea that this is all that it was going to be. That the unemployment rate was only going to top there. It's possible it tops there, but if you look at the world around you, and you look at the labor market, it seems like that the business cycle is still very much slowly playing out. And it could do something like this where it goes up, it then comes back down, and then markets do well for a while, and then maybe out in 2026 it goes up again, right? It could do something like that. That stuff has happened before, right? I mean, you can actually see prior cycles where it's done kind of that kind of stuff, where it gets one big rally up and then back down and then back up again. And in this case, you had two back-to-back recessions, right? You had two back-to-back recessions. So what if we are in sort of right? So you could just be like one consolidate, and then in 2026, maybe it goes up again, kind of like what happened in 1980 to 1981, right? That's also a possibility. But in the short term, Bitcoin dominance, 58%, still looks like, to me, although maybe I need to get my eyes checked, but to me, it looks like it's going to go to 60%. I'm guessing, first a move to 59%, a pullback, and then a final move to 60%. And it could look something like this. Like, maybe we just experienced that 2-week pullback right there, right? And then it's going into sort of this next phase where it goes up to 59, right? Gets another pullback, consolidates, and then up to 60 by the end of the year, which would look something like that, right? And then as 2025 arrives, maybe Bitcoin dominance then comes back down and then goes back down. So I still think that is going to be my base case here. Still think that dominance is going to go higher, despite the fact that we've had a rate cut, because last cycle, even the first rate cut wasn't enough to stop Bitcoin dominance, the Bitcoin dominance train. But again, those are my views. If you look at Bitcoin dominance, excluding stablecoins, and you connect the dots, we've been looking at this for years. I've been saying, look, it's probably going to top out when it tags the top of this trend line again. If it does so by December, that's 65%. It's 62% right now. That's 3%. 3% is going to get you easily over 60%, right? So, and it might happen before then, right? It could happen before then. This is also excluding stables, so there's not a one-to-one comparison, right? If you go back to the workbench and you look at the Bitcoin dominance comparison, let me go back here. I want to continue here, and then let's go back to Bitcoin dominance without stables. Right, you can see they're not exactly the same. Like the yellow one is dominance without stables. The orange one is dominance with stables. Right, so you can clearly see the difference. Right, there's not an exact match there, and it makes sense there's not an exact match, because if you were to go look at USDT market cap, it's been going up a lot, right? And by the way, USDT dominance is also really interesting to follow. And we talked about this back in March as to why it was likely going to be a local top for Bitcoin, because every time USDT dominance has hit this trend line, there's been a large correction by Bitcoin. Every time. I mean, in fact, every single one of these times it hit it, there was at least a 50% drop by Bitcoin USD. And you can see that it's been putting in higher lows ever since March 2024, USDT dominance. So what I like to do is look at Bitcoin dominance plus USDT dominance and see that it's trying to break out here, just like I did over here. And I think it's going to, right? I think it will break out, and I do think dominance will go higher. It could be that Bitcoin dominance goes higher. Maybe USDT dominance goes even higher. But I do think that it makes sense to look at the market through the lens of not only Bitcoin dominance, but also USDT dominance. And you could even throw in ETH dominance in there as well if you want. Right? You could throw in ETH dominance and see that there's room potentially for it to go just a little bit higher. And I remember pointing this out a long time ago, that this metric right here might eventually top out, at around 82%. I said this back when it was, probably at like 65 or 66%. Now it's at 77%. And you only need, right? I mean, if you look at this and say, well, what if we're right here? This is right after rate cuts last cycle, right? What if we're just right here? And we're about to get that last move to the top of the range where Bitcoin dominance tops out, as long as, along with this metric of Bitcoin dominance plus USDT dominance plus ETH dominance. Right? So to me, I still remain bullish on Bitcoin dominance for those reasons. There's still a good chance that net liquidity breaks down, and if it does, all Bitcoin pairs would follow it. ETH Bitcoin, always possible it goes just a little bit lower, but I wouldn't put a lot of weight into going, to 0.01 or 0.02. But it's still, I think, the most likely scenario is it bottoms between 0.03 to 0.04. So what I will be mostly looking towards is do alt Bitcoin pairs take the final plunge, right? Is this is this what they finally need? A rejection, not only off of that 0.4 level approximately. There might have been a wick to 0.41, right? Was there? Yeah, it wicked to 0.41, but also a rejection off the bull market support band, which is now moved down to the prior support. And if they get rejected, right? If they get rejected, then I think it's a pretty clear move down to the bottom of the range. And by the way, one of the reasons you could argue they get rejected, another reason, first of all, you could argue the reason they were rallying in the first place was because of all these aggressive rate cuts getting priced in, right? If you go look at if you look at comparing this, you can see that in December, back in September 6th, right? The market was, a lot more optimistic that the Fed would, be at a much lower Fed funds rate. But now the market thinks it's going to be a lot higher, right? The Fed funds rate will be a lot higher, right? So this was back in September. There was almost a 43% chance that the Fed funds rate would be at 4.25% by the end of the year. Now there's only a 13% chance of that happening. So it could be that those pricing out of some of those rate cuts, the pricing in of those rate cuts might be why alt Bitcoin pairs rallied in the first place. But now that those rate cuts are getting priced out, some of them anyways, that could be the reason, right? Because now the most likely outcome according to the markets, I'm not saying it's the most likely outcome. I'm just saying it's the most likely outcome right now according to the markets, is a 76% chance that the Fed only cuts 50 basis points between now and the end of the year. Which, just a couple weeks ago, there was a good chance they were going to cut 100 basis points between now and the end of the year. If 50 basis points wasn't enough to bring retail back to the table and increase activity, in the Cryptoverse, then why would, will another 25 do it? Maybe. It took 75 last cycle. But again, last cycle, the terminal rate was much lower. So this cycle, you could argue that you need, closer to 150 basis points of rate cuts to mimic what happened last cycle. So anyways, that's where I stand. Those are my views. Those are my views on Bitcoin dominance. I do not apologize for them. I know some people don't care, but I think the people that don't care have constantly misunderstood it. I think they've probably lost a lot of money in altcoins. The ones that did make money in altcoins, congratulations. I'm not rooting against you, right? I just know that there's a lot of survivorship bias associated with it, right? It's easy to look back and say, well, that altcoin outperformed Bitcoin, and to cherry pick which ones did, and ignore the thousands that have just bled to Bitcoin, right? And people tell me that I cherry pick all the time altcoins. But guys, if you're looking at a chart like Bitcoin dominance, and we're going to look at this and be rational about it and say that this is, look, anyone's going to call this a Bitcoin dominance uptrend, right? You can't get around it. Don't you think it makes more sense to say that the people cherry picking are the ones that are choosing the ones that are outperforming Bitcoin? Because collectively, Bitcoin has been outperforming the entire market. Yes, some alts have outperformed Bitcoin. Congratulations. But that's exactly what I said, right? That's verbatim what I said 3 years ago. Bitcoin dominance will go up. Some alts will outperform. And the only way that you can really, right, find some older altcoins that are durably outperforming Bitcoin is to cherry pick, right? And a lot of them even haven't, right? I mean, look at first of all, ETH Bitcoin, right? It's basically just been mostly down for years now for anyone who's cared to look at the chart objectively. Now, I know it was easy to laugh at me anytime it rallied, but objectively, this was just a macro downtrend that people refuse to believe. But look at all the others, right? Look at Theta Bitcoin, right? It's been mostly down for a long time. I'm not suggesting it can't bottom out. Look at Dot Bitcoin. It's just putting in the lows this week. Link Bitcoin, right? It's still, it's nowhere near. It's been in a massive downtrend. Litecoin Bitcoin. What is there to say, right? ADA Bitcoin. You're at this point, there's really not a prior time in this entire cycle where ADA Bitcoin, except with a couple of wicks, has been lower than it is right now, right? So if you had said, you know what, ADA, 2020 and 2021, you had a good run, but it's 2022 now, and you're valued at 6,000 sats, and even if you were a little bit later to it, like I was, because I didn't really acknowledge it until Q1, 3,000 sats, 3,200 sats, it's been a good run, but the Fed's about to raise rates, and I don't have time for alts during quantitative tightening and rate hiking cycle, right? I'll just stick with the king. You could have done that. You could have ignored all these pumps, all these people on Twitter telling you why I was wrong, and here you are down here, and it's basically as low as to spin the entire cycle, right? Same thing for most of these alts, right? Uni Bitcoin. Look, it's broken down. Now it's getting rejected probably. Aave Bitcoin has been a little bit stronger recently, but I'm curious if it's going to backtest this trend line. I think it's a good outcome. Solana Bitcoin, right? Look, Solana was one of those ones that has done better than most alts. But this is what I said back with the whole cherry picking, right? When I made my proclamation at the beginning of 2022 about Bitcoin dominance and all Bitcoin pairs going down, right? It was back over here. So you have people that disagreed with me over here saying I was wrong down here. Right? So what happens is, in order for them to justify their counter view, is rather than make the comparison from when I said it back in early 2022, they look back down here, probably when most of them capitulated Solana. A lot of them did. They sold at the bottom. And then now, after they sold at the bottom, they then say, oh, well, look, Solana outperformed Bitcoin. No, it didn't. It outperformed it if you cherry pick the bottom, right? But if you look at it over the entire cycle from when the rate hiking cycle began back in early 2022, it's underperformed Bitcoin. It has. It absolutely has, right? It's still below where it was back in early January, right? In early January 2022, it was at 37,000 sats. Now it's at 22,000 sats. So again, this is one of those things where if you cherry pick, right, a lot of people rode this down the entire way, not listening to the idea that it could actually go down that far. They sold the bottom, it then rallied back up, and then they say, oh, look at Bitcoin dominance and how bad it is to follow. If they had listened to it up here, they would have preserved the social valuation of their portfolio. Hell, if they listened to it up here, even if they didn't convert back, they're still better off. And by the way, the Solana maxis that keep, talking about the ETH maxis, and sort of dunking on the ETH maxis, even though I've been bearish on ETH Bitcoin for a long time, but I've already, I'm starting to flip, and I think it's going to go the other way in 2025. But look, I will tell you this, the ETH maxis that are getting dunked on by the Solana maxis, how do we know Solana's not following the same path that ETH did, right? Because if you look at this, Solana dropped 90% against Bitcoin. It then rallied about 500%. Okay, keep that in mind. 90% drop, and then a rally of 500%. Would we care to guess, right? Would we care to guess what ETH Bitcoin did? How many times has someone said that, that Solana is the ETH of last cycle or something, right? Look at this. It's the same thing, guys. For anyone who cares to look, right? ETH Bitcoin dropped 90%, and then it rallied about 500%, right? Not quite, but almost 500%. It's even the same pattern. 90% down, 500% up. And then look, right? It's the same sort of that 4 top pattern. That's what ETH Bitcoin did, right? You got 4 tops. And then there was a drop here. And then it came back up, and then it bled. What if Sol Bitcoin is right there? Like, what if, and I know people are like, well, it's higher lows, but look, I mean, ETH Bitcoin is putting in higher lows also, and then it broke through. What if Sol Bitcoin is following ETH Bitcoin, and it's about to break below this and then come down here, kind of like what ETH Bitcoin did? And then people are like, oh, Bitcoin dominance is at 60%. And then they sell their alts. And then maybe Solana then bounces back up on its Bitcoin pair, just like ETH did. Stays up there for some part of 2025, and then bleeds back down in 2026. It looks something like this. Right? Could that happen? Yeah, absolutely. So one of the things I've learned is if you're holding an altcoin for a long time, and your goal is to look at your alt and then dunk on higher market cap alts and to say that your alt's going to flip the higher one, right? People have been saying their alt's going to flip Ethereum for years, and they haven't. So if you're a Sol Maxi and you've laughed at Bitcoin dominance for years because of cherry picking the low that most people sold, and you're looking at it over here thinking, oh, well, look at Ethereum and look how bad it is. What if Sol Bitcoin does the same thing? And you're blinded by just how similar the move is. Look at the patterns before they actually fully play out, right? If you wait until something else happens, it's probably too late, right? So these are my views. Again, there's always a chance that Solana deviates from the path that ETH Bitcoin has carried out. But at the end of the day, Bitcoin dominance has been basically the only thing that has been more or less up only for the last several years, right? And it's the thing that I have been the most bullish on, right? Hold Bitcoin, keeping your portfolio Bitcoin heavy allows you to preserve the Satoshi valuation of your portfolio. No one knows where Bitcoin USD is going to go, right? There's a chance it goes up in Q4 like it did in 2016. There's a chance it goes down in Q4 like it did in 2019. No one knows. We place our bets, but no one actually knows, exactly where it's going to go. And so if you're an investor and you want to take on risk, then you want to make sure you're buying the lowest risk assets that give you the highest Sharpe ratio or Sortino ratio, right? You don't want to go out, not financial advice, but you don't want to go out and buy a portfolio with an expected return based on historical returns much lower than what you would just get by holding Bitcoin, right? And this is the thing I've gotten into so many arguments. People are like, well, why do, what's the problem with buying, with holding ETH? Look, there's been nothing wrong with holding ETH since June of 2022. If all you care about is the USD pair, the USD valuation of your portfolio, absolutely nothing wrong. But my point is you bought ETH over here where you could have just bought Bitcoin and made about twice as much, 2 times more. Because ETH Bitcoin has dropped since the merge, ETH Bitcoin has dropped over 50%. You could have just held Bitcoin since the merge, and then you could convert your Bitcoin to ETH now and double your ETH. Even if you're an ETH maxi, right? Even if you're an ETH maxi, you could argue that your goal is to increase your ETH. So if we get to a point in a future market cycle where it looks like the Fed's going to raise rates aggressively and go through QT, it's not a shot, right, at anyone to say that ETH Bitcoin is going to go down. It's just the way the market works, right? So you could argue that just because you're an ETH maxi, if you recognize where we are in the cycle and you preserve the Satoshi valuation of your portfolio, you convert it to Bitcoin, your ETH to Bitcoin up here, even if you're an ETH maxi, and then after this major drop happens, which was always going to happen, right? Then you can slowly convert back. Now you've doubled your ETH, and all you did was hold Bitcoin for 2 years. And that is why Bitcoin dominance is important. We'll go ahead and wrap it up there. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and I will see you guys next time. Bye.